Hi, welcome to the market alert for the 7th of January 2015. And starting off in the 5-minute chart, we can see that we had a sell signal at the kickoff yesterday at 14:30, but notice how this is in between two major psychological levels here, trading to the high there of 17,550 and down to 17,500. So you can see we're sort of in no man's land there, as opposed to having a sell signal above the psychological level with the entry price below, and the same on the downside. When we have a buy, we prefer the actual buy signal just to be below the psychological level with the entry price just above, so when it drives through it's likely to trade on to the next psychological level. So unfortunately, because of the volatility that you get at the start of a trading session, you can see that here the market went down, headed straight down. If we just draw in the entry price there, you can see the market trading all the way down to the psychological level, finding support, and then turning around and coming back and taking out the trade. But you can then also see that how the volatility increased in the next two price bars there significantly. You can see that the range in this bar, the low is 1705.02 with a high of 535. So there you can see 33 points just in this bar. It'll be the same for this one. So we're getting a lot of volatility in the market, which then sort of sets a precedent. And in this bar here, you can see we've got 50 points just in 5 minutes. The market trading through on low volume and then eventually coming back to close below the 17,500 level there. And once closing below, you see the market trading down to the 17,500. Close below this sends the market lower down to the 17,450, down to 17,400. You can see again how the market bounces back. The 17,450 is a resistance level. The market finds support at 17,400, eventually breaks. You can see the selling here in this bar, even though the price bar is narrower, which would indicate some sort of buying pressure as well. That the market then trades all the way down with lower highs down to the 17,350. The market comes back and then closes back twice again below this, and then down all the way to the 17,300, where the market finds support, closes through here, closes back, trades back up to the next psychological level of 17,350. This becomes a resistance. This 17,300 is then broken, and all the way down to the 17,250, where the market eventually finds support. See the market trading back up to 17,300, 350, back to 300, and then eventually through and retracing the move that we see here, and closing eventually just here at 17,400 and 450. You see through and then back through, and then of course you've got the end of the trading session there. And what this looks like on the daily chart is buying pressure, which we'll look at just in a moment. But again, just to show you the power of the psychological levels, you can see how this market is pushed and pulled to these levels. If you have a look at the daily chart, you will see that the volume has increased significantly. That's the first and foremost. We've got some buying pressure indicating that prices are seeing some buying activity at the level of, or the low here, of 17,250. So we know there's some buying coming into the market there. And you can see on the overnight market as well that prices are starting to reverse. Note also that 17,292 is where we drew in the 76% retracement for yesterday as well, and this is where the market has found support. On the news front for today, let's have a look, see what we've got after 2:30. We've only got the crude oil inventories at 3:30. But then a big one today at 7 p.m. we've got the FOMC meeting minutes, the first for this year, at 7 p.m. So watch this one at 7 p.m. Stay out of the market when this one is released into the market. Don't be surprised to see the market move back towards the upside, having marked it down for the last week during the remainder of the festivities. So stay out of the market for this one at 7 p.m. Major impact news item. And on the implied volatility front, we're at 16.24, 15.06 for yesterday. You can see this increasing quite significantly at the moment. Right, that's about it. So let's hope there's a bit less volatility actually. The software and the settings within the software at the moment are designed for moderate volatility, which is why we had such a good month in November. We prefer it to be have price bars that are less than 20 in range from the low to high. We get far better trades than we do with the high volatility trading days, which of course 80% of the time is what the market actually does. These big moves are only 20% or less of the actual trading time, even though the moves are bigger. Right, that's it from me for this morning. I will see you in tomorrow's edition of the Market Alert. Just remind you, stay out of the market at 7 p.m. this evening. As ever, thanks for your support, very much appreciated, and also for watching. See you in the next one.